My name is Billy Huntley, and I'm a senior business banker with Umpqua Bank. I'm honored to be here with you today. I've been in the banking industry for 21 years, working with business owners like yourself. For today's agenda, we're going to be talking about the different loan types that are available to business owners. We're also going to be talking about SBA loans in specific, how they function, how they incorporate with regular business loans, and how borrowers can achieve them. We're also going to talk about some financing best practices and things to be aware of when you're applying for a business loan. And we're also going to talk about choosing a banker, the importance of aligning yourself with the correct bank and banker that shares your values and your company's goals. The first loan type we're going to discuss today is the business credit card. Business credit card is the simplest financing tool available for business owners, and it's a little different than some of the other loans we're going to talk about later on, as most business owners can get approved for a card as a startup, where most of the other loans have a time and business requirement. The business credit card is best suited for your daily purchases. Think about your expenses that you have on a daily basis. So anything that you pay for day to day to run your business, you may be putting on a debit card today. A credit card is a far better tool to make those purchases. There are a few subtle differences between the business credit card and the business debit card, but if used correctly, it can make a major difference in your day-to-day cash management. One of the major differences is the stronger fraud protection available for a business credit card versus a business debit card. A business debit card carries unlimited liability. So essentially, they are not regulated the same way a personal debit card is. A personal debit card attached to your personal checking account does carry some sort of fraud liability typically. So your liability is limited, usually $50. On a business debit card, that is not the case. Additionally, business debit cards typically have limits. Therefore, you may not be able to achieve all the purchases you need to make in one day on your business debit card if you have a large purchase. Where a business credit card, you have a pre-assigned limit and you can purchase items up until that limit. The business credit card also gives you cashback and rewards options. Therefore, you have the ability to earn cashback on your purchases, points that can be redeemed for gift cards or other benefits, and provide a nice little benefit for the day-to-day purchases you're making. The other important difference between a business credit card and a business debit card that really tilts the favor towards a business credit card is the free 25 days of float you get in your checking account. When you make a purchase with your business credit card, you don't have to pay that until you are invoiced. Essentially, you will get a statement, and then typically you will want to make that full statement balance payment when you get that. Therefore, you will not pay any interest. However, over the course of the statement, you will have larger balances in your checking account, which will give you more flexibility with your cash flow. One best tip I can give you for a business credit card is always pay the balance in full. If you feel like you are going to run a balance on the card, there are other financing options available that may be better suited for that particular purchase. The next loan type we're going to discuss is the line of credit. The line of credit is similar to the business credit card in the way it is meant for short-term financing. It's best suited for short-term upfront costs prior to revenue coming in. A couple of ways a line of credit can be used. A retail store paying for inventory upfront prior to selling that inventory is one way that comes to mind. So oftentimes, a retail store may need to purchase a bulk load of inventory and may not have the money to pay for that until after they've sold it. This is the type of cost or expense that can be put on a line of credit, as it is relatively short-term and can be paid back once the inventory is sold. Another way a line of credit could be used is for a service provider or a professional who has accounts receivable. Typically, there are expenses up front related to the work being done for a client that are not paid for until the work is completed. Therefore, a line of credit can be used for a cash flow bridge to pay for some of those upfront expenses. There are a couple other ways where a line of credit might make sense. Some companies like to do marketing or potential expansion or bring on new employees. Those are all examples of activities that will probably generate some upfront expenses that we'll need to pay for before revenue comes in or revenue grows. Therefore, it is likely that that will be paid back in less than 12 months. However, there is a need to borrow before the revenue comes in. Lines of credit are best suited for debt that will be paid in a year or less. If you have an expense or a financing need of a year or longer, there are other loan types that are are more beneficial to you and make more sense, and we will discuss those later on. The next loan type we're going to discuss is the term loan. So a term loan is different than a line of credit. One important thing about a line of credit that I should have mentioned in the previous slide is that the payments are very flexible. The bank bills you interest-only payments monthly, so the payment is very manageable, and then they expect the business owner to pay the principal back on their own terms, typically in a year or less. A major difference of a term loan and a line of credit is a term loan you have for a specific period of time. There's a fixed monthly payment that is principal and interest. Most conventional term loans are anywhere from 3 to 5 years. Term loans are best suited for debt that is going to be paid back in greater than 1 year. Some of the most typical reasons a business owner would take out a term loan would be purchase of new equipment, working capital that wasn't going to be paid back within a year. Maybe you need to borrow some money to expand your business, bring on new employees, or just need an influx of cash and you can qualify for it. However, it's just not best suited for line of credit financing. Acquisition of a business or partner buyout are a couple other reasons why you might take out a term loan. The next loan we're going to discuss is the commercial real estate loan. So a commercial real estate loan is exactly how it sounds. It's meant for buying the building that you operate your business out of typically. So you think of a doctor or a CPA running their practices out of that building, and they buy that building. Or a restaurant owner buying the building that they run their restaurant out of. There's a couple reasons why you'd buy your building as opposed to renting. Typically, most business owners are not able to buy a building right out of the gate. There's savings that has to be accomplished for the down payment. There's profitability that has to be shown over a 2 to 3 year stretch in order to buy your building. One of the main benefits of buying the building you operate out of and investing in commercial real estate is the equity you build. So typically, when you start a business, you'll lease a space and run your business out of that space, and then you'll pay a landlord. But when you purchase your own building, you'll be paying a mortgage, you'll be paying the bank instead of a landlord, and you'll be benefiting from the equity you're building in that building. The biggest difference between a commercial real estate loan and a term loan is the term of the loan. So a term loan, typically you'll have 3 to 5 years to pay the bank back. You'll have principal and interest payments that are the same over that 3 to 5 year period. And once you've completed making those payments, you'll have paid off the loan. So a commercial real estate loan, the loans are typically a little larger, so banks have some more flexible options for business owners. So typically, on a loan, it's a commercial real estate loan, say of $1 million, the bank will give you either a 5 year term or a 10 year term, and in some cases a 15 year term. However, in order to make those payments more flexible, the bank does the payment schedule on a 25 year term, also called a 25 year amortization. This makes the payment more flexible and a little easier for the business to handle. So at the end of the 5, 10, or 15 year term, depending on the specific loan program you have or specific structure of the loan, you'll still ultimately probably have a balance on that loan. Then you'll have a balloon payment due, and at that point you can either refinance that debt, or if you've got the ability to do so, you can pay the debt off in cash. Commercial real estate loan is a great way to buy the building that you operate out of, and it's also provides many other benefits such as building equity and wealth for you and your family. We also offer commercial real estate loans for investors. So what this means, if a commercial real estate investor, if a business owner wanted to buy a building that maybe they were not going to operate their business out of, but they thought it was a great investment, they could buy that building, lease it to another business owner, and potentially build equity that way as well. This type of loan is generally reserved for people who have some sort of experience with investment real estate. It doesn't necessarily have to be commercial real estate, but at least in single family investment or residential investment homes. The next loan we're going to talk about is SBA loans, also known as Small Business Administration loans. So SBA loans are loans banks make where the risk is shared between the bank and the Small Business Administration. Small Business Administration is a federal government agency dedicated to helping small businesses access capital. Most of us are very familiar recently with SBA loans, mainly because of two types of loans. So the Payroll Protection Program, also known as the PPP loan, was an SBA loan, as well as the EIDL loan, which was also a stimulus loan for the pandemic, was also issued by SBA. So the biggest difference between an SBA loan and a conventional bank loan is typically there is one or two aspects of the loan request that just don't fit what the bank typically does. Therefore, what the bank can do is go out and ask the Small Business Administration to share the risk on this loan, and allows the bank to take a little bit higher risk. Typically, when you're talking to a banker, you don't necessarily have to ask for an SBA loan. So when a bank talks to an applicant or talks to a business owner about a potential financing option, typically they're going to talk to them about conventional financing. The reason being is conventional financing is typically in the best interest in the borrower if they can obtain that. So the SBA loans, they're a little higher risk. That's why the bank goes out and gets the additional support from the Small Business Administration as far as helping to support that loan. And that risk, the little bit of higher risk, it's passed on to the borrower in the form of slightly higher borrowing costs. That's why when you're talking to a banker, they're typically going to try to get you into a conventional loan product if that will fit. Now, another reason an SBA loan may be appropriate for a business owner as opposed to a conventional loan, maybe if we're talking about a piece of commercial real estate or a commercial real estate loan, which we talked about in the previous slide. So one of the things we do a lot here at Umpqua Bank with SBA loans are commercial real estate loans, because we can have a little less down payment on an SBA loan, 10 to 15% as opposed to 20 to 25%. So as you can imagine, that can make a big difference for a borrower when buying a piece of commercial real estate. So as I said earlier, generally when you're talking to a banker, you don't have to ask specifically for an SBA loan. If the banker's doing their job, they're going to talk to you about all the options available. They're going to interview you, ask questions, learn about your business, and then make a recommendation. And if based on what they've heard from you, a conventional loan may not work, we're probably going to see if an SBA loan will work. Now, with that being said, not all bankers do what they're supposed to do, right? So what I would say is if you're declined for a loan, or if you're being told that a conventional loan won't work, it never hurts to ask specifically if an SBA loan may work. Types of loans that are available are the same type of loans we previously talked about. So SBA loans come in lines of credit, term loans, and commercial real estate loans. Next, we're going to talk about some common questions I've received on SBA loans. So the next question is one I get very frequently, so I thought this would be a good topic for us to discuss. So many borrowers are wanting to know, hey, if I have an SBA loan, does this preclude me from potentially getting other types of financing and other types of loans? There's no easy answer to this, but the best way to answer is case by case. What I can tell you, the stronger financial performance of the business, the better the chance to obtain additional financing if you already have an SBA loan. So one thing to consider, if you have an SBA loan and it's not for real estate, there's probably either a bank or the SBA themselves that have what is called a UCC filing on your business. It's important to understand the term UCC filing. It stands for Uniform Commercial Code. So what that means, when a bank or the SBA or a vendor or essentially anybody has a UCC filing on your business, it means they have rights to your assets should you default on payment. Every bank, lender, or vendor wants to be in first position when it comes to a UCC filing, because that means they have first rights on those assets if their loan is defaulted on. So if you do have an SBA loan and the lender that did that SBA loan has a UCC filing, also known as Uniform Commercial Code, what that means is that they have the best position to potentially get the money back if the business defaults. Most lenders and banks do not want to go into what's called a second position UCC filing behind another lender, because it's considered a lot riskier and unlikely the bank will be able to recover any money in the event of default. This is typically what may prevent a business owner from getting a second loan or additional financing if they have an SBA loan, or even if they have any other additional loan at another bank. This could prevent additional financing. However, this wouldn't prevent you from purchasing a new piece of equipment and obtaining financing that way for that equipment, because because that is a different form of UCC filing. It's specifically on that piece of equipment you're purchasing, and therefore that loan can be done. Same with commercial real estate. If you're buying a building, the loan is really based on the building being the collateral and not just general assets of the business. So it's really a case-by-case basis. What I can say is the stronger the financials of the business, the stronger the credit of the borrower, the stronger the financial condition of the borrower, the easier it's going to be to obtain multiple forms of financing for your business. The next topic we're going to discuss are some best practices for financing, especially when you're preparing to submit a loan application, talk to a banker, and discuss the needs of your business. So I think one of the best practices, I think that maybe the most important one, is just being organized with your financials, your paperwork, and being ready to have that discussion, and really being up to date with what's going on with your business and having the documentation to show that. So a few of the things that you're going to need when you're preparing to talk to a bank and banker about a loan for your business, typically you're going to need 2 to 3 years of tax returns for the business and the owners of the business. Now one thing I will say is, each bank is going to vary slightly, depending on the loan amount, depending on the sophistication of the loan, depending on what the loan's for. The need list could be different. But generally what I'm going to cover will be good for most loans, and sometimes you'll need less, sometimes you might need slightly more, but this will typically cover more scenarios. So 2 to 3 years of tax returns for the business and owners of the business. Another reason this is important is because it also is important that I highlight that for most loans outside of a business credit card, you will likely need 2 to 3 years of history prior to being able to obtain financing. Banks like to say we're historical cash flow lenders. So what that means is they lend based on the historical cash flow of the business, meaning they look at the previous 2 years and they look at that profitability, and they say, what, based on what we've seen in the last 2 or 3 years, we agree this is likely to continue moving forward or get better, but typically you should be making money, at least this amount of money going forward. That's why it's important for the bank to review the previous 2 to 3 years of tax returns. Another thing the bank's going to look at is kind of how you're doing in the current year, right? So, say you apply for a loan in the middle of the year, the bank will want to see 2 to 3 years of tax returns for the business and the owners of the business, but they're also going to want to see a P&L and balance sheet for that current year. Reason it's important for a bank to look at that is they want to look at trends. So they want to see, how's the business performing this year? Is it at least in line with how things have gone in the past? And banks do take things into account. Say you're a seasonal business that does a heavy amount of business, maybe in the fourth quarter of the year, and 6 months through the year things are not looking great because a lot of that business comes in the fourth quarter. That can be explained, and banks definitely will take that into account. You'll also need a balance sheet that just shows essentially what the assets and liabilities of the company are, that aligns with that P&L for the current year. Banks will want to assess what liabilities are on the balance sheet, what the monthly payments are, and can you handle new debt. Another thing banks will probably be looking for is accounts receivable aging reports or some sort of inventory reporting. So as we talked about earlier, banks will usually take some type of collateral when they do a loan. Typically that's the UCC filing, Uniform Commercial Code, which we discussed in a previous slide, and the bank will need to assess what collateral is available that the business has. Typically that's going to be 3 things. It's going to be accounts receivable, inventory, or equipment. Another important piece of information to have handy is your personal financial information. Typically banks will ask for that in the form of a personal financial statement, which is really a document that captures how much cash you have in the bank and investments, cash, investments, retirement, and then real estate owned. This is important to the bank for a couple of reasons. One reason is if something goes wrong, you have a bad year with the business, do you have other ways to pay the bank back potentially if for whatever reason the business is unable to do so. And it's important to really have these documents up to date and available, and that's probably one of the biggest things I can say is have them accessible, and even if it's not needed up front, readily available should you need it. Next part of financing best practices we're going to discuss is what's important to banks when approving a loan. So the first thing I'm going to talk about is the industry. So one thing that's really important to the bank is the specific industry of the business. So specifically, is that industry at risk potentially if there's some sort of economic downturn? So the two most recent economic downturns that we've seen, I'd say over the last 15 years, we've got the financial crisis of 2008, and several industries were really hit hard by that financial crisis, but specifically contractors, general contractors, trade contractors such as plumbers, electricians that did a lot of business with builders and general contractors. And the reason being, for those of you that remember the financial crisis of 2008, is the housing industry was just crushed. The values of houses went down 50% seemingly overnight. Therefore, what happened is a lot of homes were foreclosed upon, banks ended up owning a lot of homes, and just really a tough time for everybody involved. But anyway, the bank will look at past economic crisis and look at what industries are potentially affected by major downturns. And so what that really looks like when a bank is looking at, let's just say, a contractor, knowing that there was the economic and financial crisis of 2008. The bank is going to really look for really well-run businesses with owners that are really strong personally, have a history of running their business, and have made it through economic crisis in the past. So when I'm working with a contractor, it's really important that if they were not around and made it through the 2008 financial crisis, that they have a lot of strength personally, and their business is well run and the financials are strong for that business. That is the way to get around an industry that potentially could be affected by a future financial crisis, and a bank might take a stronger look at. So essentially, in an economic downturn, the bank is going to be very picky about what loans they make and what loans they don't. Of course, most recently we have the pandemic. 2020 was a very tough year for lending. There was about 6 months of absolute uncertainty, and another industry that was hit hard, of course, was the hospitality and restaurant industry, which are generally and typically difficult businesses to lend to as well, outside of equipment and real estate. So another crisis that we had to work through, and really important for business owners, of course, to be really strong and show well-managed businesses in order to get lending. Another thing that banks are going to look for is collateral. We talked about this a little earlier. What kind of collateral is available to the bank to make the loan? So typically, as we said, accounts receivable, inventory, equipment, etc. The bank typically will look at this collateral, and find it three ways: either an accounts receivable aging report, some sort of inventory reporting, and what's on the balance sheet. And typically, as we said, when the bank makes a loan, we're going to do what's called a UCC filing against the business, which states, hey, the bank has some rights to these assets should the borrower default. Another thing that's really important to the bank is the strength of the borrower, the personal guarantor of the loan, so the owners of the business. The personal credit score of the borrower really impacts a business loan. There is such a thing as business credit. It's reported on a couple different reporting platforms, such as Dun & Bradstreet and Experian for Business. However, it's somewhat limited as far as what vendors and what types of companies actually report to those platforms. So the bank really relies on the personal FICO score of the borrowers. And your personal FICO score, of course, is your personal credit score, and it's really attributed to how you're managing your personal finances. Some of the things that go into the personal FICO score, of course, are how much credit you have, how you're using your credit, specifically your revolving credit. Are you paying it off monthly? Are you running high balances that are close to the limit? And of course, late payments and defaults are something that can really impact your personal FICO score. So I would say, for personal credit, as long as you're making all your payments on time, you're not overextended in revolving debt such as credit card, you're typically probably going to be okay on personal credit. And as we talked earlier regarding personal strength of the borrower, cash in the bank, being strong financially personally, it's immense, and it helps you immensely when applying for a loan, because that's what we call a secondary source of repayment. If the business can't repay, you have the resources and assets available to potentially repay a loan. And lastly, we also touched about this earlier, time in business. Most banks are going to require at least 2 to 3 years in business in order to obtain a business loan. Less for a business credit card, as we discussed earlier. And there are some circumstances where you can get a loan of less than 2 years. Typically, that's going to be one of those SBA loans sponsored by the Small Business Administration. However, it is a little more challenging, even less than 2 years with SBA. So for the first 2 years, a business owner really needs to count on either self-financing or alternative forms of financing. Next, we're going to talk about the importance of choosing the right bank and banker for your business. There are many things to consider, and we're going to start with bank values, community involvement, and the size of bank. So the biggest difference between a community bank and a national bank is a community bank is probably going to be able to provide a more customized approach for you, have a little more personalization, and you're probably going to see a heavier involvement in community and a heavier presence in the community from a community bank as opposed to a national bank. Locations of bank branches are another big thing. How relevant is it to your business? Think about all the different ways to transact as a customer today. Mobile deposits, there's remote deposit machines available, there's ATMs, and think of how often do we really need to visit a bank branch. Now this may vary if you're a cash-based business. You may have the need to have a conveniently located local branch. If you're handling cash, you need somewhere to put that. Another thing to consider is the technological capabilities of the bank. We just spoke out of much of the technology banks have today. Most banks can offer similar technology. However, some of the super small banks, the technology is not quite as good. The medium-sized banks, which is where Umpqua fits in, typically have all the technological capabilities of the big banks, but more customization available to help meet your needs and make sure we're customizing an approach that's a good fit for you. The other thing that's going to be important is having a banking relationship that really includes everything you need. You know, your deposit accounts, so where you put your money on a day-to-day basis, checking, saving, so on and so forth, your loans, your credit cards, services such as processing, accepting credit card payments, payroll. It's important to have a comprehensive relationship with your bank, meaning the more you have, the more flexible they're going to be, the more leeway they're going to give you, and the more ability you're going to have to get approved for financing you need. It's really hard to approach a bank that you're not already doing business with and ask for financing, especially if not everything doesn't line up perfectly. So my advice to you would be find a bank and banker that you have a real connection with, right? That really understands your business, gets excited when talking to you about their business, and also truly listens to what your needs are and what your pain points are. A few other things that are important when talking to banks and bankers is how responsive is your banker? How available are they to you? Are they always getting back to you in 24 hours if you have a need or an issue arises? Are they creative problem solvers? When something comes up, do they think outside of the box to accomplish the objective? Or are they trying to run you through a bunch of hoops? Do they proactively recommend solutions that are going to create efficiencies every day? Meaning, do they truly try to make your day-to-day banking simple and try to make it easy on you? And then do they make recommendations that are going to help meet your midterm, short-term, and long-term goals? And lastly, knowledge of the banker. Does your banker truly understand your industry? Do they understand your business? Are they excited to learn about it? And are they making value-added recommendations when needed? These are all things to keep in mind. I think the biggest thing out of all these, though, is finding a banker that you feel confident you can work with, you feel confident will be responsive and approachable, and is excited to work with you. Nobody's perfect, but if you find someone with those traits, I think you'll enjoy working with that banker. Thank you for your time today. I really appreciate the opportunity to present to you. My contact information is on the slide. Please don't hesitate to reach out to me if you have any questions or if I can help in any way. I'm happy to be a resource for you and help you moving forward. Thank you again.
いかがでしたでしょうか。ビリーさんのレクチャー、なかなか銀行員の方のお話を聞く機会がないと思いますので、いろいろと参考になった方が多いのではないかと思います。ではこの後はライブの Q&A に移りたいと思います。クエスチョンがある方。
Okay, so Billy, so many of the self-employed people work at home, so their home and business is the same place. So in that case, I guess, what would be the best way to, I guess, they apply for the loan, or what kind of a loan is available in that kind of a situation?
Thank you. No, good question. Yeah, so really all of the same loans are still available if you're a business where you work from home. You know, you kind of think of, it depends on the need. So a line of credit is definitely available if there are short-term financing needs. You think of, you know, a lot of professionals, a lot of consultants that are working from home nowadays. And there's still, you know, if there's working capital needs or, you know, small equipment needs that you need to run your business out of your home, there's term loans available as well. So it's, for the most part, it's the same types of loans that are available. The only type of loan that probably wouldn't be applicable is a commercial real estate loan, since you're running your business out of your home. But other than that, you know, it's common for business owners to operate out of their home these days. And there's still, you know, definitely still needs for lines of credit, term loans for working capital or small equipment.
ビリーさんの答えですね、別にお家で自宅でご商売をなされてもそれほど違いはないと、ラインのクレジットもできるし、ワーキングキャピタルもあるし、この先ほど言ってらしたタームローンというのもアプライすることができると。おそらく一つできないのは商業用の不動産のローンであるということですよね。お家でお仕事をなされているので、その対は対象にならないということなので、それほど違いはないということです。So that one of the audience said that he or she heard that it is harder, more challenge for self-employed people to obtain loan. What would be the best, I guess, the advice you have for those people who are self-employed that would be that increases the chance to get the loan? Or sure, I mean, I guess I don't know, there would be 100% way to obtain it right now. You can't say that, but what would be the best advice you can give them in order for them to increase the chance to get a loan approval for the self-employed?
Yeah, I think another good question, and a lot of this too is dependent on the size of loans and types of loans that are, you know, small business owners are looking for. I would say for most small businesses, I would say, you know, they're probably looking for loans anywhere from, you know, under 100,000 up to, if you're a larger small business and it's real estate, maybe $1 million, maybe a little more than that. But for those size loans, really, I think the most important thing is good personal credit and establishing a strong credit history. I would say, you know, for small business owners that are just kind of starting to establish their personal credit, at least 2 trade lines is typically what banks are going to look for that have been open for 18 months. It can be credit cards, can be a mortgage, can be really any piece of credit that reports to your personal credit report. And the other piece is just some level of profitability. You know, I think those, you know, especially for, you know, most small businesses and the size of loans that they're going to be looking at to support their business, those are the 2 biggest things probably. You know, on the smaller loans, I would say, and this varies a little bit from bank to bank, right? But anything that's like 150,000 or less, I would say there's not a lot of super intense financial analysis that goes into it. It's really, do we have, you know, some level of profitability? Do we have a strong credit score for the owner? Those are the main 2 things. You know, once you get into loan sizes of a little larger than 150, then there's some analysis of, can you pay it back, including all the other debts. But again, personal credit also goes a long ways on those as well.
Okay, thank you. 初めにおっしゃったのはサイズと金額ですね、ローンの金額のサイズ、そしてタイプによるということなんですけれども、通常やはりセルフエンプロイメントというか個人事業の方っていうのは大体ローン額っていうのは10万 ドルから1ミリオンぐらいの間ではないかと思うんですけれども、やはり一番大事になるのが、その個人の事業主さんの個人レベルでのクレジットスコアがすごく大事だと。で、それとやっぱりその過去のそのクレジットスコアとヒストリーというのがすごく大事になってきますと。で、少なくとも事業をやっている場合は、やはり銀行側としては、過去18ヶ月のやっぱりクレジットスコアのヒストリーというのを見るということなので、例えば、住宅ローンがあったりとか、クレジットカードをお持ちになったりっていうのは、すごくやっぱり役に立つそうです。そしてやっぱり事業の方でやっぱり少しはやっぱりプロフィットが出ていないと、出ている方がもちろんローンが取りやすい。で、小さいローンっていうのは大体通常銀行間では銀行と銀行によってまた違うかもしれないですけども、その小さいローンっていうのは、スモールローンって先ほどおっしゃってましたけど、それは大体15万ドル以下のことを言うらしいんですけれども、それでもおそらく、小さいローンであれば、やはり個人レベルでのクレジットスコアがすごく一番大事になってくるのではないかと。で、それプラス、事業で多少利益が出ていること。で、15万以上になると、やっぱりもっとやっぱり深く踏み込んで、これ実際に本当に返済できるのかどうかというところを、やっぱりもっと詳細に見ていくというところが銀行がやっぱり注目するところらしいです。Okay. So this is more, Billy, is kind of more specific. The question they're asking about they kind of want to know what, I guess maybe there might be a formula. So how much of the profit, let's say you have $800,000 of the building or whatever you wants to purchase. So the real estate that you want to purchase is $800,000. What would be the profit or maybe the sales that will be suitable to obtain this particular $800,000
loan? Sure.
Loan?
Yeah, so it's it's called a debt service ratio. Debt service coverage ratio is the metric we use. So ultimately, what we're looking at is, especially on a closely held business where it's owned by one or two or just a few people. We're looking at all the income they have. So that includes net income from the business. That includes any personal income they're paying themselves, salary-wise. We also, add back in depreciation, interest, those expenses we can add back. So we take all that available income from the personal and the business, and we divide that by the annualized debts, personal debts and the business debts. And we've got to come up with a minimum number of 1.25. That's the minimum debt service coverage ratio. And that's pretty much an industry standard. So if you add up all your income for the year, divide it by all the annualized debt payments, then you'll come up with a number, and it's got to be 1.25 or greater typically.
Okay, thank you. で、この質問に関してではやっぱり銀行さんではですね、あるデッドサービスカバレッジレーションという、計算方法がありますと。で、これはどこの銀行でも使われている計算方法なんですけれども、どうやって計算するかといいますと、まず事業の利益、それプラス例えばじゃあオーナーさんがもらっているお給料なんかもありますよね。で、それを足して、で、パーソナルインカムとおっしゃっていたので、他にもその収入があるかどうか。で、事業の収入、ごめんなさい、利益、パーソナルの利益、それプラス、これも私が先週説明いたしましたが、先々週か見ていただいた方は多分もう覚えていらっしゃると思うんですけども、減価償却。1年の減価償却の金額をその3つを足します。だから、利益だけではなくて、自分で取ったオーナーさんの、サラリーなんかも足して、で減価償却も足して、でそれを3つを足したものを1年間に払わなきゃいけない、返済額で割ります。で、その割った利率が 1.25 倍以上でないといけないと。ということは 1.25 倍ということは、1年間の利益プラスパーソナルインカムプラス減価償却が 返済額のよりも多くなければいけないということですね。だから 1.25 倍以上でなければいけないということで、それが大体の、銀行間の、今産業インダストリースタンダードと言われてましたので、それがスタンダードであると。根本的に基本的にそういう数字を見ますということです。So Billy, so this is a good question, I think. So you talked about finding a good banker for their own businesses, and so they ask us, so how do you start? Where do you start from there? Because you might make an appointment, but you won't be able to, appoint someone who you may want to talk to someone, or maybe you found someone, but then not necessarily you might be able to talk to someone, then communicate. So what do you suggest? How do you find a good banker?
Yeah, I think, and that's a great question, and it's not always easy, right? I think for me, when I think about it, I think of, looking, for one, if you look at a couple different banks, probably banks that you think are aligned with, your goals of your business and you personally, whether that be from a community perspective or, whatever's important to the specific business owner. And, try to find a couple banks, go talk to a couple bankers, and, really just, to me, it's really getting a feel for having a connection with a banker, trying, a lot of it's a gut feeling too, right? It's just, do I think I like working with this person? Do I think this person will be responsive? Do you think, and I think the biggest piece is, and circling back to the question earlier about it's hard to get financing. If you are declined for a loan, you should be working with a banker that can really articulate why that happened and what needs to be done going forward to meet that goal. So I think it's, finding somebody to work with that you think you're gonna be on the same page with, and then finding somebody that's got enough skill that can really articulate, what we need to do to get you to that next spot. And it's not easy, and it probably takes a few interviews to get comfortable with somebody. And I think the other piece that's important is, it's always good to ask how long they've been in banking and how long they've been with the current bank, because unfortunately bankers do tend to hop around a lot, and if you find one that you can work with, continuity is really important, especially when you talk about understanding your business and your goals and your specific financial situation.
Great, thank you. ビリーさんももちろんそれとてもいい質問ですねとおっしゃってます。もちろん言うのは簡単だけれども、実行するのは難しいと。でも彼のサジェストンでは、まず2、3個を銀行をちょっと訪れていただいて、そこでアポイントメントを取っていただいて、バンカーにお話をしてくださいと。でそこでですね、いろいろ聞いていただいて、でもやはりなんですかね、アプローチャボーって言って、本当にこの人ちゃんと私と一緒になんていうの、いろいろ助けてくれる人かなっていうようなことを聞いていただいて、でもやはり彼もちょっと言ってたんですけども、やっぱ第六感といいますか、なんていうの、やっぱりフィーリングっていうのもありますよねって、パッと見て人と話していて、いやこの人私とちょっとうまくいっていけるかなっていうような感じの、やっぱりあれも受けると思うので、それもすごく大事ですと。それでもちろん本当に簡単なことではないんですけれども、例えばじゃあ銀行さんに行って融資をアプライしました。でもやはり却下されてディクラインされましたっていう場合にも、本当のいいバンカーさんだったら、じゃあなんでそれが却下されたのか、じゃあこれからどうしていったらいいのかっていう、改善策っていうのを話してくれると思いますと。だからそういう方とを見つけられるようにちょっと努力されたらいいのではないかと。でそれとやっぱり銀行バンカーってやっぱり銀行ちょっと渡り歩く癖があるらしいので、銀行さんの方も。だからまずバンカーにもやっぱりどれぐらいの銀行員としての経験があるかということを聞いて、かつ今ある銀行でどれぐらい働いているんですかと。もしその方がね、多分1年ごとに銀行変わってたらやっぱりちょっとって思うところもあると思うので、そういうことを頭に入れてやっぱり2、3個あたり、2、3人の方とお話しして、自分のこの方だと思う方を見つけていかれたらいいのかなと思いますということです。So the Billy is the last question. So you talked about the size of the banks in your presentation. We're talking about the national banks and community banks, and there isn't. We're talking about the mid-market banks like yours. And they're asking, maybe can you give a list of banks that you will fit, I mean, including yours, fit in that category?
That are like the kind of middle
the
of the road,
community
like
bank, like Ampua Bank, and then similar to that size and then services.
Sure. Yeah. I mean, I would say, so kind of thinking locally, right? We're kind of, in a community bank, we're far and above the other community banks as far as size right now. But there's Banner Bank is out there. They're kind of comparable in size. They're not nearly as big, but they're pretty similar in a lot of things.
Banner Bank?
Banner Bank,
yeah. Okay, Banner Bank, okay.
I would have said Columbia Bank, but we are actually merging with Columbia.
Right,
so
that's
we're going
right.
to be one bank here soon, but I would have said them as well. And then, there's a lot of banks on the smaller side on the community bank spectrum, which is perfectly fine. There's Heritage Bank, which is a local bank. It's on the smaller side. First Security is a really small bank, community bank that's local. What I could do is I could potentially provide a list of community banks and kind of size wise. And I think, community banks are great. I think that it's kind of finding one that's got the mix of two things really, right? It's the ability to be flexible and customize and, be personable with their clients, have a personal approach, along with all the, needed solutions. So technology, enough locations. But I'm happy to provide a more in-depth list of community banks and size of banks.
This is just my own. Before I translate, can I ask about what's the difference between, I guess, the function-wise credit union and the banks like yours?
Yeah, it's a good question. So, like community banks, like Umpqua Bank, we're still a for-profit company. Ultimately, we have we put a larger focus on putting money and hours back into the community. A credit union ultimately is a nonprofit, so any profit they make in a given year goes back to their members in the form of product savings, so on and so forth. So I mean, they're credit unions. I mean, they operate mostly the same because their goals are the same. It's a little different kind of what they do with the dollars at the end of the day.
Okay, great, thank you. So で、最後の、質問のお答えなんですけど、その中堅の銀行ということで、この辺であればバナーバンクですね、そのバナーバンク、それからコロンビアバンクで、実はコロンビアバンクでもうすぐアンプコアバンクと合併するんです。で、ヘリテージバンクで、あとすごく小さな銀行で言ったらファーストセキュリティバンクというところがありますと。で、もしよければこういう銀行のコミュニティバンクのリストもありますので、それもご提供させて、ご興味があればご提供させていただきますということです。そしてやっぱり一番大事なのは、コミュニティバンクのことで探しているときに一番大事なのは、やはり、なるべくその銀行さんがフレキシビリで、いろいろカスタマイズしてくれると、自分のニーズに。そしてやっぱり銀行さんと銀行で働いている方たちが、パーソナルレベルでいろいろ対応してくださる方っていうのはすごく大事じゃないかなと思います。それプラス、いろんなソリューションがあって、テクノロジーもちゃんとアップデートしていると。でちょっと私自身がちょっと聞きたかったので、私個人の質問だったんですけども、クレジットユニオンとコミュニティバンク、アンプカバンクさんみたいなところの、一番の違いは何ですかって聞いたんですけども、アンプカバンクさんとかそういうコミュニティバンクさんっていうのは、もちろんその営利銀行なので、プロフィット、利益を上げるということはまずありますよね。その利益を上げてコミュニティに貢献すると。その代わりクレジットユニオンというのはノンプロフィットなので、いずれはそのノンプロフィットですから、そのメンバーさん、クレジットユニオンに入っているメンバーさんにその利益が出た場合はそれを還元するという、そこが一番の違いですということです。
はい、わかりました。ありがとうございます。ビリーさん、たくさん質問を答えていただきましてありがとうございました。
Thank you very much, Billy.
まだ質問があるようですけども。
Thanks everyone. Have a good night.
Thank you. 本日はワシントン州日米協会スモールビジネスエンパワーメントアカデミー第2回ウェビナーにご参加いただきましてありがとうございました。それではまた次回に。